Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, let's talk about how to use this more appropriately. A, we were in a seasonally weak period of time. That's information that was known ahead of time. I didn't come out after the fact, all right? There's a lot of markets that have adhered to the seasonalities, the grains. If you go back and you listen to this, and if they've recorded this, you can review this. Here's another thing that you want to pay attention to. In the grains, traditionally, corn and soybeans, the high is posted for the season around the 4th of July week. The lows posted around the 3rd to last week of October through the 2nd week of November. So therefore, if you go look at soybeans, a chart of corn and soybeans, you'll notice that they were around $16, $17 a bushel, and you'll notice they're around $11 now. Corn was around $8. Corn's around $5 and change right now, and you'll see what the high was and where they are now. So when you look at the euro currency, and we talk about seasonalities with the euro currency, then number one, you'll understand for next year or going into October, you may be wanting to look for a buying opportunity going in October if you are at an important support level and if you have good, solid signals, triggers. So here's one. If we are on an intraday, this is a 60-minute chart on the euro currency, and we have a sell signal against predicted resistance. Look at this, every day, predicted resistance. And here's our monthly support. So right now in the last few days, we've held support. Remember, with the ISE's Euro Index, it would be at what? The opposite of this. So it's at resistance, whereas the spot Forex is at support. Just keep that in mind. So if you've never, the importance of showing you this is because if you've never been introduced to spot currencies before, if you've never been introduced to options on currencies, you're going to be confused when you hear, wait a minute, this ISE thing, what the heck, the EUI, you know, I'm listening to the news and they're talking about the euro currency at 149.10 and, you know, the EUI's trading at like, where are we at? Again, 66.99, 67 even. I don't get it. It's an inverse relationship. That's why. So the rules are, look for seasonal weak period of time. If the daily's in a sell mode, then take intraday sell signals or trade with the current trend and do so with options. If you have an idea that our monthly support is around 149, well, by gosh, don't buy a 145 put. That's too far out of the money, right? If you know the markets are around 155, 154, and you're in a daily and seasonal weak period of time, I mean, 1, 2, 3 trading days, you had almost a 400-point move. Plenty of opportunity to make the right decision and plenty of opportunity to profit. So hopefully the next time around you're going to understand the power of seasonalities and the predictability power of using longer-term pivots as an aid on your side. In summary, once you see the trend condition and price expansion targets, such as the monthly pivot, choosing the right option strategy can be made a little bit easier. I know what my time frame is. I know that how many days of an option expiration I need, and I think that's something that can help you out. A lot of people don't look at that. They go, well, you know, choosing the right option time frame. As of right now, and of course this is August 12th, if you looked at an August expiration on the EUI, that's the ISE's Euro Index, August expire in 3 days. SEP have 38 days. October, 66 days out, right? So possibly we look at October and we could say to ourselves the next major month out would be December with 129. Let's look at October as the next big opportunity, save some, bank some dough, pay attention to October as maybe a potential seasonal low in the market, and start looking at watching the ISE's EUI Euro Index. And again, this could be used and the same content can be used for the yuck, the Japanese yen, and there's a huge relationship seasonality for the Japanese yen, but we don't have time to get into that in today's presentation. British pound has two maiden seasons, by the way, and very, very strong seasonalities. And again, the yen and the pound have more history than the euro currency, because the euro currency has only been around 10 years. We can take a weighted, there's a little bit more information that you need, but we can take a weighted factor and go longer term with the euro and find out more history by averaging out the French franc, the Italian lira, taking the German Deutschmark, averaging those out, and we can get more history. But bottom line, I think it's good enough to say right now, watch in October for your seasonalities. Pay attention to seasonalities. In October for the euro currency. For any other trades that you do, watch those seasonalities and choose the right strike price, the expiration date, and strategies. And that can all be achieved by using past chart points combined with pivot point analysis. And that may help you to harness more trading opportunities. And like Steve said earlier tonight, the Holy Grail is simply this: hang on to your winners and cut your losses. And if you can manage that, and check your ego at the door, and I'm a firm believer of that, then that's the main power that seasonalities give you. That's the main power that pivots give you, because there's a defining line drawn in the sand for you, and it's green, and it was solid, and it's right there, and it was based off mathematical, and it's not your ego talking. It was pivot point monthly support saying 149, take some profits, get out of this market. And I think with that said, you're going to have a lot better chance of setting yourself loss and profit targets in the markets. Now, Steve was very kind in mentioning some of my products. This was my very first book that I wrote on combining candles with pivot points, and that dealt more with futures in the markets. In fact, I talked in that book, it had examples when silver was at $3.50 an ounce. In fact, that did another example on scaling with coffee futures when coffee was at 49 cents a pound. And you'll notice that, and you'll scratch your head and say, yeah, that book's a little outdated. Funny thing is, that book's only 6 years old. This was my second book. This is probably my favorite book, Candlestick and Pivot Point Trading Triggers. Goes over a lot of the stuff that we did. Forex Conquered, excellent book in itself. It gave trading strategies, code with TradeStation, code with Genesis software for some Forex trading systems. And we have our DVD sets, and we have our trading courses that we give out and available on our website, which is www.nationalfutures.com. Now, I know there's got to be questions, and I don't want to end this presentation without hitting a couple questions. So let me, I know we had...
Let's take them, John. One thing I want to just jump in and say...
Yeah, why don't you jump in there, Steve? I'm sorry.
John, I just want to remind everyone to go back to nationalfutures.com. John's going to be all over the world in the next couple of months. He's going to be in Las Vegas, Paris, as he mentioned, San Diego, Singapore, Washington, D.C., back to Vegas, and then he'll be in Florida. So if you're in any of those localities, I'd urge you, go to his website, find out what the actual dates are, and sign up for these events, because you could see, he gave you an hour's worth of material. He's going to give you a lot more live, and you'll be able to ask him all kinds of personal questions. So please check it out.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.